So, imagine you walk into a bank today, right? And the teller talking about your account isn't just like bad customer service.
Right, or a breach of some corporate policy.
Exactly. Imagine it's a literal crime, like punishable by actual prison time.
Which is pretty wild to think about now.
It's crazy. But, if you're managing immense wealth, you don't really just want a polite promise of privacy.
No, you want a guarantee. You want it backed by uh, the threat of incarceration, basically.
Yeah, and that's exactly what we're looking at today. Welcome to the Deep Dive, everyone. I'm your host, and today we're unpacking a fascinating source document about how a relatively small, landlocked country, Switzerland basically turned itself into the vault of the world.
It really did. And
Yeah.
I'm thrilled to be here to break this down with you because, criminalizing transparency completely changed global finance.
Totally. And for you listening, I want to be clear, this isn't just some dusty historical trivia. We're looking at the machinery behind the curtain. Because whether it's, massive tech companies sheltering profits today or global elites hiding assets, understanding this shows us how global power actually operates.
It really is a fundamental rule of geopolitics, right?
Yeah.
Like, wherever capital concentrates, influence just inevitably follows.
It has to, yeah.
Exactly.
Yeah.
And to really grasp this multi-trillion-dollar engine, we kind of have to strip away our modern assumptions. Like, forget the pristine corporate offices in Geneva for a second.
Right, the glass, the skyscrapers and all that.
Yeah, forget all that. We need to look at how this country positioned itself in a deeply chaotic world. Because the foundation of the whole system wasn't actually the money itself.
Wait, really?
Yeah, the money came later. The real foundation was this incredibly specific, almost manufactured kind of trust.
I'm really glad you brought up the chaotic world part because geography is just huge here. When you look at the source documents for the early 20th century, Europe was, it was essentially just a series of overlapping disasters.
Absolutely. Total chaos.
You've got the First World War destroying empires, right?
Yeah.
Then the Russian Revolution comes along and just entirely seizes private wealth.
And then, you roll right into the hyperinflation of Weimar Germany, where the currency becomes literally worthless.
Right. People taking wheelbarrows of cash to buy bread, and then the Great Depression hits. So reading through this, I kind of thought of Switzerland as acting like a geopolitical Faraday cage.
Oh, a Faraday cage. I like that. Expand on that a bit.
Okay, so, well, you know how a Faraday cage is like an enclosure that totally blocks out external electromagnetic fields?
Right, yeah.
So no matter how much static or, like, lightning is striking on the outside, the inside is completely undisturbed.
That's a great analogy.
Right, because Switzerland was physically right in the dead center of the continent, surrounded by all this economic and military lightning. But politically, it was totally neutral. A financial Faraday cage.
Yeah, that is a highly accurate way to visualize it. Because think about it. If you are a wealthy industrialist in 1920s Germany,
Or like a French aristocrat or something.
exactly, watching the political tides turn, your priority is absolutely not maximizing your quarterly investment yield.
Right, you don't care about a 4% return.
No. Your singular desperate focus is just preservation. You're watching lightning strike all around your house, and you are trying to find the cage.
You just want assurance that the new revolutionary government isn't going to seize your factory.
Right, or that an invading army won't destroy it, or hyperinflation won't just evaporate your savings overnight.
So capital just naturally flees toward the quietest room in the house.
It does. And what happens over time is that a specific culture begins to crystallize around that influx of money.
Okay, culture meaning what exactly?
Well, Swiss banks didn't just build physically secure vaults. They cultivated this culture of extreme discretion. They didn't ask probing questions about where the capital was coming from.
Right.
They simply provided the sanctuary.
But, informal discretion is really just a cultural habit, right? Like, a banker keeping their mouth shut because it's good for business only goes so far.
Yeah, informal trust is actually incredibly fragile.
Right, because at some point, foreign governments are going to come knocking. They're going to demand to know where all their tax revenue went.
Which is the exact friction point that forces the whole system to evolve. Because a single scandal or, one leak, and that trust vanishes completely.
So they had to formalize it.
Exactly. To become the unquestioned capital of global finance, Switzerland had to take that cultural inclination toward privacy and basically etch it into stone.
And here's where it gets really interesting, because this brings us back to that 1934 hook we mentioned, the Swiss banking law.
Right. A huge turning point.
Yeah, I really want to drill down into the why here, because the source material makes it clear this wasn't just some proactive idea a bunch of bankers brainstormed over coffee.
No, not at all.
It was a direct reaction to some very intense external pressures, wasn't it?
Yes, the historical catalysts here are just fascinating. It completely reframes how we view the law. So in the early 1930s, you have two massive forces putting pressure on Swiss banks.
Okay.
First, you have the rise of Nazi Germany,
Right.
and the regime is actively hunting down the assets of political dissidents
Mm-hmm.
and Jewish citizens who are just trying to quietly move their wealth out of the country so they could survive.
God, just a terrifying environment for anyone trying to preserve their livelihood.
Beyond terrifying.
Yeah.
It was life or death. And then simultaneously, on the other side of the border, you have the French government.
Dealing with the depression, right.
Exactly, dealing with massive budget deficits from the Great Depression, and they are desperately trying to stop capital flight, which leads to this massive inciting incident in 1932. The French authorities basically raided the Paris offices of a Swiss bank, the Basler Handelsbank,
Oh, wow, they literally just marched in.
marched right in and seized a ledger. And this ledger contained the names of over 2,000 wealthy French elites.
2000.
Politicians,
Yeah.
business leaders,
Right.
all hiding their money in Switzerland to dodge taxes. And the public scandal in France was just deafening.
So the Swiss suddenly realized, like, oh no, our informal culture of keeping quiet doesn't mean anything if a foreign government can just raid a branch office and grab the Rolodex.
Precisely. They realized the informal Faraday cage had a huge leak. So their response in 1934 was to pass legislation that fundamentally altered the relationship between a bank and the state.
By making it a criminal offense.
Right. By making it a crime for a bank employee to disclose client info without consent. They didn't just punish bad bankers, they created a sovereign shield.
Okay, let's unpack that because I want to look at the mechanics of the sovereign shield
Yeah.
because it's actually brilliant in a very cynical way.
It really is.
Like, if I'm a French regulator and I go to a Swiss banker demanding the account details of some corrupt politician, the Swiss banker doesn't just say, company policy forbids me from telling you.
Right, because that wouldn't hold up.
No, they say, if I tell you, my own government will throw me in a federal prison.
Exactly. It shifts the jurisdiction entirely. The foreign regulator is no longer fighting a bank's terms of service.
Right.
They're suddenly fighting the sovereign criminal code of an independent nation. The human element, like the temptation or intimidation of the banker, is completely removed from the equation.
But wait, I've got a question about that. How did the international community just accept this?
What do you mean?
Well, if an entire country decides to just legally blindfold international regulators, why wasn't Switzerland immediately sanctioned or, like, financially blockaded?
Ah, right. That is the genius of timing and leverage.
Okay.
Because in the 1930s, there was no unified global financial regulatory body like we have today.
Yeah.
There was no OECD pushing for tax transparency. Right.
Ah, so no one was coordinating.
Exactly. Every nation was busy fighting its own domestic fires during the Depression. And furthermore, as Europe was gearing up for the Second World War, belligerent nations actually needed a neutral financial hub.
Oh, to conduct trade and stuff.
Right. They needed a place to settle debts, buy resources, conduct international trade. Sanctioning the one functioning neutral financial switchboard in Europe would have hurt them way more than it helped them.
Wow, so they made themselves totally indispensable to the very people who might otherwise try to tear them down.
They absolutely did. And for the people looking to protect their assets, this law was just the ultimate assurance.
The ultimate Faraday cage.
Exactly. And so the motivation of the client base shifts dramatically here. It moves from fear-based preservation, like hiding money from the Nazis or fleeing a revolution, to strategic, calculated control.
Because once that sovereign black box is established, it becomes a magnet for everyone. Not just desperate refugees, but global elites.
Everyone who's anyone, yeah.
We're talking massive corporations, oligarchs, entire foreign governments. Like, if you manage vast generational wealth, the appeal is just intoxicating. Total invisibility.
No investigative journalists poking into your holdings.
Right. No local politicians demanding a cut. Just total silence.
And we have to look at the macroeconomic consequence of that magnetic pull. Because when you create an environment with zero friction, zero exposure, and absolute legal security, capital doesn't just trickle in.
It floods.
It floods.
Hmm.
The sheer volume of wealth pouring into the country created an unprecedented concentration of capital.
Which, ironically, creates a completely new problem.
Right.
This is where the source material gets into the actual mechanics of the wealth
All
itself.
right, the money management side.
Yeah, because if you have billions and billions of dollars flooding into your country and you just stick it in a vault, well, it rots.
Yeah, inflation eats it alive.
Right. Storing wealth is totally passive.
It's actually a liability.
Mm.
If you were guaranteeing the preservation of wealth, you can't just let it sit idle. You have to put it to work.
So how do they solve that? Because investing $1 billion quietly seems like a total oxymoron.
It does, doesn't it?
Yeah, like when you move that kind of money in global markets, people notice. It leaves a footprint.
This is where the transition from just banking to wealth management happens.
Yeah.
And it's arguably the most vital piece of the entire puzzle.
Okay, break that down for us.
So the Swiss banks evolved from passive vaults into these highly active, sophisticated financial engineers. They developed mechanisms to decouple the identity of the owner from the capital being invested.
Decouple the identity. Okay, explain how that actually works in practice.
Sure.
Like if I have $100 million, right,
Yeah.
and I want to buy real estate in London and equities in New York, how does the Swiss bank make sure my name never appears on a deed or a stock certificate?
They utilized incredibly complex legal structures, primarily shell companies and trusts. Let's look at a trust, for example. In a traditional setup, you own your money, right? But under a specialized wealth management trust, you, the settler, legally transfer the ownership of your assets to a trustee.
Which is the Swiss bank.
Exactly.
Wait, so I just give up legal ownership of my own money?
On paper, yes. You give it to the bank to manage for the benefit of a beneficiary, which just happens to be you or your children.
Okay, I see where this is going.
Right. Here's the magic trick.
Right.
Because the bank is now the legal owner of the assets, when that money buys an apartment building in London, the purchaser isn't you. The purchaser is a Swiss entity.
Oh, wow. And if a foreign government comes looking for your assets, the bank can technically say, well, they don't own anything here.
Exactly the point. The legal firewall is absolute. And then they layered this with nominee directors.
Nominee directors, what are those?
Basically, people whose entire job is to just have their name on the public paperwork of shell corporations.
Oh, like in jurisdictions like Panama or the British Virgin Islands.
Exactly.
Yeah.
Which are, in turn, managed by the Swiss banks.
That is wild.
Yeah, so by the time the capital actually enters the global market to buy stocks, bonds, or real estate, it has been washed through so many layers of legal abstraction that the original owner is totally invisible.
It's literally a financial cloaking device. And the banks are actively managing this portfolio, right? Optimizing it against international tax laws, ensuring it grows.
Oh, absolutely.
The source material explicitly points out that this was designed to survive across multiple generations. Like, this isn't day trading. This is engineering a dynasty.
Engineering a dynasty is a great way to phrase it.
Yeah.
Because it's the difference between being rich for one lifetime and being wealthy for 3 centuries.
Right.
By offering these hyper-specialized services, navigating complex cross-border tax liabilities, setting up multi-generational trusts, legally sheltering dividends, the Swiss banks created what we can basically call a secondary moat around their industry.
Okay, the secondary moat. So the first moat being the 1934 secrecy law.
Yes. The 1934 law is what originally got the clients through the door. But this unparalleled, deeply entrenched expertise in wealth management is what kept them locked inside the ecosystem.
Ah, I get it.
Because let's say another country, hypothetically, passed a banking secrecy law identical to Switzerland's tomorrow. It wouldn't even matter.
Because they wouldn't know how to run the machine.
Exactly. They wouldn't have the century of institutional knowledge. You cannot just overnight replicate an army of lawyers, accountants, and financial engineers who have spent generations learning how to invisibly weave capital through the global tax system.
No, that takes decades to build.
Right. And once a family's wealth is plugged into the Swiss financial operating system, it is deeply inefficient and potentially legally dangerous to try and untangle it and move it somewhere else.
The friction of leaving is just too high.
It's incredibly sticky capital.
So if we look at the timeline so far, we have the origin of trust, born from their geographic and political stability, the Faraday cage. Then we have the 1932 Paris raid and the Nazi threat forcing them to weaponize that trust into a criminal offense in 1934, creating absolute secrecy.
Yes.
And finally, they build this massive, complex wealth management engine to actively grow the money while keeping the original owners invisible.
A perfectly engineered system.
Which brings us to the modern reality. Because I'm looking at this history and I'm looking at the world we live in today, and the environment is entirely different now.
Oh, total different. Night and day.
We are in an era of intense digital connectivity. After the 2008 financial crisis, the U.S. passed FSASA, essentially forcing foreign banks to report American accounts.
Yep.
And the OECD implemented the Common Reporting Standard. There are massive coordinated international efforts to crack down on tax evasion and hidden wealth. So the absolute secrecy of 1934 has taken some really serious hits.
It definitely has. The legal landscape has fundamentally shifted.
Yeah.
I mean, Switzerland has had to sign treaties and agree to automated information exchanges that would have been completely unthinkable 50 years ago.
So then the obvious question is, what does this all mean for them now? Why are they still managing trillions of dollars?
Yeah, it's the big question.
Right. Like, if the original legal shield has been pierced by modern transparency demands, why hasn't the capital just fled to somewhere else? How does the system survive?
Well, this raises an important point because the nature of their advantage shifted. When the primary moat, that absolute state-backed secrecy, began to erode under international pressure, the secondary moat held the fortress.
The expertise.
Exactly. The reason trillions of dollars remain in Switzerland today is precisely because of that institutional knowledge we just discussed.
The administrative superiority.
Superiority, stability, and inertia. Look, you can force a treaty that chips away at secrecy, but a treaty cannot magically replicate a century of unbroken political stability.
That's a really good point.
A wealthy family in an emerging market dealing with political volatility today, they still look at Switzerland and see a nation that hasn't fought a war in centuries, has a rock-solid currency, and respects the rule of law.
It's still the quietest room in the house, even if the door is, like, slightly cracked open now.
That's a very fair assessment. Furthermore, the sheer complexity of global wealth today. I mean, imagine navigating the tax implications of owning tech startups in Silicon Valley, manufacturing in Asia, and real estate in Europe.
Oh, what a nightmare.
Right. It requires an infrastructure that almost no one else possesses at that scale.
Yeah.
The clients stay because nowhere else can manage the complexity of their wealth quite as efficiently.
So even as the rules around secrecy have evolved, the architecture of the system is still there.
Exactly. The gravitational pull of that expertise remains firmly intact.
So the banks are still dictating massive capital flows, influencing international investment strategies, and holding the keys to the resources of some of the most powerful entities on the planet.
They are deeply entrenched in the machinery of the global economy. You really cannot remove them without causing immense systemic shock.
You know, unpacking all of this really changes how you look at the concept of a bank. Switzerland didn't stumble into its status as a global financial titan by accident.
No, not at all.
And it certainly wasn't just a byproduct of having nice mountains and neutral politics.
Yeah.
It was a highly engineered system.
Very deliberate.
They capitalized on the chaos of their neighbors, codified secrecy into their criminal justice system when threatened, and built an impenetrable labyrinth of legal structures to manage the wealth.
And even as the world around them demands more transparency, the foundation they built is so deeply rooted in the global economy that it adapts rather than breaks.
Yeah.
It really reinforces the overarching theme of our source material, which is that power doesn't just originate from the mere existence of capital. True power comes from the architecture that protects it.
Which leaves us with a critical question to look forward to. If historical power flowed to a geographic haven that offered the best legal and political protection, what happens next?
That's the million-dollar question.
Right. As international regulatory pressure continues to squeeze traditional banking centers, for you listening, you have to wonder what the next version of a safe place for wealth is going to look like.
It's the frontier of modern finance, really. Will the global elite simply seek out a new physical country?
Like an emerging economy willing to offer total secrecy for an influx of capital.
Maybe. Or will we see a complete paradigm shift? The concept of a safe place might detach from sovereign nations entirely, moving into decentralized digital realms.
Oh, like cryptocurrencies and blockchain-based trusts.
Exactly. Autonomous organizations. If the ultimate fortress of the 20th century was a country hidden in plain sight, the fortress of the 21st century might not exist on a map at all.
A completely borderless financial Faraday cage. That is a fascinating thread for you to pull on as you watch global financial news unfold. Pay attention to where the capital is flowing because that is exactly where the power is being built. Thank you for joining us on this deep dive into the architecture of wealth. Keep questioning the systems around you, look past the obvious narratives, and we'll see you next time.